What is up, everybody? How are we doing? All right, I'm basically done trading for the day. It's been a good day. A little bit of a struggle up front, but we survived it. But I want to do some trade review and kind of go through my process a little bit and how I'm using data, how I'm using Edgeful every single day as a part of my trade plan, my trade setup, my execution, every bit of it. It's an integral part, putting the data behind it, and of course Q&A as well. If anybody has any questions or thoughts, anything that they want me to go over, would love to answer any of those live here as well. Let me get some music in the background. Need some music or something. I can't just sit here in silence. There we go. All right. Perfect. All right, so let's make this a little bit bigger. If we do that, let me... How's that right there? Okay. Perfect. All right. Probably can make this even a little bit bigger for you guys. All right. So one thing that I go to first and foremost every single day. So I look at charts as we're coming into the open. The first thing I look at every single morning, every single morning, is gap fill. So I have these indicators on here on my chart. I want to know where the previous day's range is, where the gap fill is every single day. And actually, I can even go back a couple days on. I think I can go. Maybe I can't. But I look at this every single day. Previous day's high and previous day's low. Today we had a gap that we didn't fill it, but we did break previous day's low, and yeah, it just got ugly from there. And there's a lot going on my chart here, but from the open, I mean, just terrible price action, or not bad price action, just terrible for bulls. Of course, if you were short, obviously you caught it very nicely. Now, here's the thing: going into the day, I don't like to trade at the very beginning of the day, honestly, unless I just have some very good setup, maybe a gap fill. Honestly, wouldn't have even minded to try to trade this gap fill this morning because it was a small one based on the size. But let's see, was SPY actually filled it right at the open. So you see, this is based on yesterday's close right here. Yesterday's close right at the open. We filled the gap, whichever direction it is. That's one of the first things I look for. And then previous day low, as soon as previous day low broke, I'm immediately looking at that and taking a close look at what's going on. And I'm going to look at the data. So the first things that we have to pay attention to here. So you see it says bullish here, but that's because the gap was above us. Now, if that gap filled, that takes this out of the equation. So if we would have come up and filled this, like maybe just wicked up here, filled the gap first and then come down, that probably actually would have even helped today be a little bit even cleaner. But when we look at this, so we have several things here. Once we get that first hour candle, which is going to be, let's see, where was our first hour? 10:30. So right here, once we get to this point, these are 15-minute candles. Once you get to this point, we know a lot about the market just based on data. So the first thing I want to look at, opening candle continuation. I look at this every morning once we get that first hour. You see this right here, this tool from Edgeful, it just tells me bearish. Our opening candle was red, that's bearish. So the first thing I'm going to do, I go to the report and actually pull up the actual stats. When the opening candle is green, we have a green day 82% of the time. When it's red, we have a red day 68% of the time, which means we do recover a third of the time when that opening candle is red, but it's not very probable. So it's already going into my mind that up here, so this, where this gap fill is, this is yesterday's close, this is where we would have a green day. This to me is not a target for anything at all because of the low probability of that happening. Right here, it's only 68%, or only a 31% chance that we're going to get up there, 68% chance that we close underneath this level right here and stay red on the day. That's kind of like one of the first steps that I'm looking at. Another one I'm looking at is the previous day range. Let me get back to QQQ here. Previous day's range, you see it tells us it's bearish as well. We go to the report. Previous day's low broken. 35% of the time, we come back and turn green on the day. 65% of the time. So basically 2/3 of the time, when you take out, if we go, look at this, previous day low right here. When you take out previous day low, you don't close green very often. You don't. Look at the right here. This was yesterday. This is yesterday's action. We broke previous day's low. For us to come close above this line, which is the break even, if I zoom out a little bit further, you'll see we closed the day right here on Friday, and then yesterday's action, closing above this, closing a green day, is a less than a 1/3 probability. So like, even though I did get long down here yesterday and play it back this direction, my target was essentially right in here at the best, at absolute best. When we started getting into this area, I was taking off pretty much my entire trade yesterday because going green is a low probability. And if you look, previous day low, look where we rejected yesterday. Right there, right as we got into previous day's low, we rejected there. You see today, if you're playing the long side today, maybe you get back to previous day's low, but this is a low probability move. So if you get long, you need to look for something, some type of confluence, whether it's the 30-minute orb, which if you look at here, let me hide these drawings. I've got so many things here. Let's hide some of this stuff. There's our 30-minute orb. So if you got long down here, that's kind of your main target, is getting back to that orb low, in my opinion. You don't want to really shoot for this up here because, once again, the statistics, the probabilities that you're going to come back up here and close green are very, very, very small. Very small probabilities here. So once again, there's two just based on that opening candle, that first hour, there's two things that I look at. So one of them, the previous day high and low, that's any time of day. But I showed you that opening candle continuation report. which if you're in Edgeful, if you try out Edgeful, you can go over here to the left side and you see all the reports. If you want stock, you can do futures just the same. I like charting QQQ. It's what I follow as much as anything while I trade in Q. Put whatever ticker you're trading. If you trade anything else, if you trade Tesla, if you trade NVIDIA, it doesn't matter. You can trade it all right here. But previous day's range, and then I talked about opening candle continuation. I'll just click on it here to show you guys again. That is based off that first hour. This is a strong statistic. If that first hour is green, I do not want to play any reversals back down to a red day. Maybe I fade a move back to orb high or something like that, maybe back to break even, but I'm not looking for that day to close red. I mean, that's just a very small probability. So if that first hour candle on QQQ is green, I'm not looking for a reversal red. Right here, not as strong as a probability, but still pretty strong numbers. 2 out of 3 times when that first hour of the market's red, we're not going to close green that day. So I'm immediately getting my directional bias in focus, and any target, so any counter trend trade, anything I'm going against this, I'm automatically thinking I need to lower my price targets. I'm not looking for a big home run, big V-shaped recovery, because the statistics tell me it's not going to happen. The IB, so this is an example from today. This is a perfect example from today. All right, IB is the first hour of the market. Let me just go down to just that indicator right here. Just the first hour of the market. So from right here, this was our high of the first hour. This was our low of the first hour. This is where the first hour ended. The first hour actually closed right here at 512 on QQQ. But we have this low and this high. Now, looking at this action, and let me zoom in even further. Actually, let me go to a 5-minute chart. Let's make this a 5-minute chart, and let's get even a little bit more granular with it. So we came down, maybe you had some levels of support, 510 area down here. Maybe you were looking for some support, but we came down, we set the IB, and you see we bounced, was at about 1020, we bounced and we were back up in this area. And we did continue up, but this kind of turned into a bear flag. Now, when I start seeing this break down, if I do want to get long, which I did want to get long, what I set out on Spaces this morning, what I was looking for was a break of this IB low. Now, why am I looking for that? Because 82% of the time, we break at least one side of it. 82% of the time. Look, 2 out of 123 days have we not broke either side of that. So, I mean, that is a crazy, less than a 2%. So that tells me every single day when we get, I keep clicking on the wrong one here. Let's do this. All right. Every single day when we get this first hour, which here, let me just highlight it. So first hour here. Oh, I need this button right here. First hour here to right here. So that right there, first hour, here's the low, here's the high. Which one has the highest likelihood of breaking? The bottom side, right? So like I want to get long, but I want to wait because I know that there's a high probability, especially when I see this price action here, this kind of counter trend little bear flag, and it starts to break down. I'm thinking, okay, we're probably going to come break this side of that IB before we do anything else. Like I don't want to try to long until maybe we have that in our favor. So knowing that, that's a strong probability, 82%. Knowing that, I was looking for us to come break this, which I had support down here, 510, right here on QQQ. On NQ, it was the same kind of thing. Here was the IB low, and then I had this 21K right here. Let's see, if I'll just hover over it right here. This is 21K, which I figured would be some support, and I had some other factors of confluence. We're down a lot, et cetera, but I was looking for that area to get long. Plus, I was looking for this 82% probability to play out first to get that out of the way, because the last thing I want to do is get long somewhere on one of these dips, knowing that there's a high probability that we're going to come down here. Do I want to sit in that drawdown? No, I don't. I want to let the statistics work in my favor. So in this case, I let this IB break to the bottom, and as soon as it did, I knew that was out of the way. Now, that tells me two things. A full reversal, this kind of goes with that first hour candle thing. A full reversal only happens 16% of the time. What does that mean? That means for us to come break this today is only 16% probability. Now, does that mean it can't happen? No, of course it can happen. It happens 16% of the time. But that means that as I'm long down here, my target should be back up in the middle somewhere, whether it's a 30-minute org, whether it's the middle of this. If I actually look at what's the midpoint of this, you'll see there's a pretty big area of interest right in the middle. This is the halfway point. Just using a simple measuring tool, a halfway point of that first hour, that's probably the main target for any type of longs, right? Once we swept these lows, we got a nice buy reaction. We took out this high, so we don't have a lower high anymore. And maybe you stay in it a little bit longer, or you trim and you hold some runners and maybe bump up a stop, which is what I'm looking for. I'm looking for around this midpoint. I'm looking for VWAPs, I'm looking for targets, but what I'm not looking for is the home run shot up here, the V-shaped recovery, because that only happens 16% of the time. I don't want to trade 16% of the time. I want to trade things that are 80% of the time, 60% of the time, even 70. Anything above a coin flip, I want that on my side. So that's kind of like one of the main points that I wanted to drive home was, and I had the thesis this morning. I was like, I have support down here, and even in this area, I have support. I want to get long, but I can't get long until we really stop fighting that probability. If I go back to what's in play over here, you can see all the bearish biases too. Bias is bearish because we broke the bottom side of that. We see breakdown, yes. Breakout, no. Breakout would be the upper side. So we broke to the downside. Yes, we did. We broke, obviously, the 15-minute orb, of course, we broke that to the downside. Now, in looking at the rest of this, IB by rejection, here's another bearish indicator. It's saying that we're headed down. Previous day's range was broken right at the open. Not looking for a reversal to go green. So I've got 1, 2, 3, multiple things that are telling me that we're bearish. Now, I can put some other things with this, right? I can say this right here, ADR. We did exceed the last 5 days ADR. So we're probably a little bit overextended. So coming down to the bottom, we're probably a little bit overextended. As you can see, we did put in a nice low after we broke that IB, and we've moved back up. Now, this is something I was never aware of until I started using Edgeful and I started seeing what data tools and statistics are out there to put with my trading. So I think this is a very, very important thing to use. If we go back, we can go back and look at other days. When we have the gap fill and combination, yesterday off the open, here, let's go to 15-minute chart. And let me see, yesterday, right here. So right here, yesterday we closed down here and we gapped up. And honestly, by the time we opened, let's just zoom in here and look a little bit. Here's our opening price right here. We had a very small gap to the downside. That should fill almost every time. You also see the overnight gap over here. So that should tell me, like right here at the open, even though it wicked up real hard, we should be coming down to fill that gap. That's a high probability as well. So that's something else I'm looking at first thing in the morning. And if you go to the gap fill report and look at that size, which I just measured 0.15, when you gap up, and I can go over here within the report itself, I can go by size, so sub-report, by size on QQQ, and look at this. When we gap up, 80% of the time, if it's this size gap, so 0.19 or smaller, 80% of the time we go fill that gap. 80%. So when we're right here at the open, here, let's see, I can do the replay. Let's do this. 5 minutes and play. All right, so let's watch this happen. There's our open. Here's our gap all the way down here. Boom, now it's filled. Let's see, let me go back a little bit. Let me go back to pre-market again. How do I slow this down? Let's slow it down just a bit here. All right, let's look at this play out again. So at the open, I know we've gapped up. We closed way down here the day before. And I know that we've gapped up. I know we have this big gap, and you see there's the opening candle. And here, let me pause right there. Let me pause. Oh, pause. Okay, so the opening candle right here, we wicked way up here. We had a nice wick up, way up here, but I know that this gap should fill. And you see, zoom in here. Here's that gap. It's drawn for me with the indicator, but here's that gap. And as soon as it fills, we get an orange candle letting us know it's filled. Now that probability is played out. That doesn't mean the trade is over, but this is something you should obviously always keep in mind. So, you know, and we're at this right here. Now we need to look at previous day's low. Boom, down there. So if we break this, I automatically know from the statistics, if this breaks, I'm not looking for a green day. And if we go a little bit further, boom. We not only broke it, we didn't even think about stopping right here. So we broke the previous day's low. This is yesterday's trading session. So we broke that previous day's low. Let's go over to that report again just to look at it. Previous day's range. There we go. Previous day's range, okay. Right there's your statistics. Once we break through, 65% of the time we're gonna have a red day. Once we break through. As soon as we broke this, I'm not looking for us to close above this line, which was the gap fill, which was the previous day's close, the rest of the day, period. If we get back up here, if anything, I'd be willing to short it. If we're up here, if we got up into this area, I would be shorting, looking for this area, because I know I have a 65% probability that we close down in this area. So there's a lot of context to put with it, but that's the biggest key, right? SPY, we can look at the same things. And when I do see previous day's range break, let me turn off replay here. So when I see right here at the open, you see SPY broke previous day's low. Nice recovery on SPY today, but we're not looking for this because we know the statistics. And if I go to SPY on the statistics, let's look at what SPY's statistics are. I've got about 10 more minutes or so that I can run this, but I definitely wanted to create this video for everyone. SPY, 57% of the time, red day when you break the previous day's range, 57% of the time. So more than half the time, SPY is not going to reverse up here. Previous day's low, right there. It's not, once that's broken, that's, you know, if you're long, that's your target. And if you get a reclaim, so here's an example of this from yesterday. You see, this is previous day's low, this red line, same indicator from yesterday. We broke down, we came back, look, we rejected it. You could have shorted here. If you got long down here, if you had some confluence to get long, I think this was around 6,000 SPX. There was some confluence maybe to get long. And you took it back up here and you see this, okay, now I'm back into green on the day. SPY went green yesterday, but in my head, I'm going, okay, do I really trust this move? Because I know that more times than not, this is not going to close above this line right here because of the statistics. Once again, you break the previous day's range, you rarely close, or for example, you break the previous day's low, you rarely close back the other direction. So previous day's low breaks, you rarely close green. Previous day's high breaks, you rarely close red. That's just what the statistics are. And as you can see, the data doesn't lie, right? Data doesn't care about feelings or thoughts or what else is happening or narratives. The data is the data. So we came down, we held, so we actually reclaimed into previous day low. So I like this on SPY. And I'm like, okay, well, maybe you can stay long a little bit longer, but at some point you need to be looking to get out of this because as you see, we start to roll over, we come back red and we close the day red. The statistics don't lie. They told us that was the highest likelihood. And that's what I want as a trader. I want the highest likelihood possible whenever I'm trading. QQQ yesterday, look at this, previous day's low, I was showing this a while ago. Previous day's low, we break, we came back, even though SPY had reclaimed, QQQ had not. QQQ was the one that was weak and leading us down. Now you see QQQ gets right back to the previous day's range. And I mean, how clean is this? Just hover my cursor over here. How clean is this rejection right here? The after hours lows, boom. 1, 2, 3, 4, 5, 6 upper wicks right here on the 5-minute chart. can't close any higher than this this 525 area, can't close any higher. And then look, roll over, because we're not looking for this. And if you were fighting against the data and the trends. And let's go back to today, see what we're doing right now. So when I mean, every day I'm opening up Edgeful, I'm watching this, I'm checking this, I'm going back and forth. I'm checking this. I want to see, I'm going to check gap fill. And you can toggle these on and off if you don't care about IB by rejection, if you don't care about like outside days or whatever it is. If you don't care, like you can turn these things off. But I like having all of these opening stats. Look at this. It's just right there on the list for me, but it tells me what's going on. But IB, just to summarize this as I come up to my cutoff here, IB, first hour, this right here, right there, boom, bottom, top. Let me turn off this other stuff so you can see it. There's the top. One side's gonna break almost every single day. Let's look at SPY. SPY had already broken it right here, but QQQ had not. Let's go to the previous day. Let's see. Go back one day on that. Boom. So SPY did not break either side yesterday. Now that is a rare thing to happen. I don't care what's rare, I care what's common, and I'm gonna always play what's common. If I go to this and look at SPY's statistics on it, SPY without breaking, that is a very, very low probability. So yesterday was an outlier day for us to not break either side. That was a very outlier type of day. But QQQ, look at this. It took all day. It took all day, but that 82% still happened because look, we didn't break either side. We came back into the middle. As we rolled over, the statistics told me that, hey, we should break this side or this side. Doesn't matter which one, but when I add in some other context here, I can go, okay, the most likely side that's going to break based on this is the bottom. And once again, there it is right there. Look, right at the end of the day, closed on the lows, made a new low of day, held true to the statistic. We did break the IB low, even though it was basically at the end of the day, we broke it and we held on to this right here 82% of the time. Anytime I go on here on Edgeful and I see statistics that are 82% of the time, 75% of the time, those are things that jump out to me immediately. Those are things that I'm immediately going, hey, I want to trade in this direction. I want to trade in this whatever. I want this in my favor. I don't want to go against it. So knowing that, I'm gonna wait and see these things set up. And then just on the what's in play, this is such a powerful tool because there's times where I'm looking at this chart. Maybe I'm looking at just this morning and I see this right here and I'm thinking, hey, V-shaped recovery, right? Boom, V-shaped recovery. We took out this morning high. We're pushing back up. Hey, V-shaped recovery, V-shaped recovery. Why would I? Oh, look, we're still going. V-shaped recovery. And then now look what's happened. Boom. Maybe I look at today and I think the same thing. Maybe I go to right here and I go, hey, look, boom. Oh, it's a W. It's a W. There's RSI divergence. Well, I'm still not looking for this to happen because I can look over here and see. And I love this aspect of it. I can see right here quickly. Let me zoom out a little bit just so it's all on the screen. I can see quickly right here. Okay, we've already ES. This is on ES. Okay, we've already filled the gap. Bearish, 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 bearish. Let's go to SPY. Gap was filled. Bearish, 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 bearish. It's telling me don't try to hit home runs today. This tool right here it's taking away any bias or thoughts I have, and it's giving me data-backed bias. Bearish, 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 bearish. And then look at the price action today. I don't need to be super bullish. I don't need to look for full recovery because the statistics tell me it's unlikely. Now, if this does finish out this next hour up here, Hey, great. It was an outlier day. I don't care about outliers. I care about trading what happens 80% of the time, 70% of the time, because that's what we want as traders. We want to win. We want to win, 60% of our trades or maybe 50% of our trades, but we want to win high probability stuff as much as possible. And we want to extract as much profit as possible. So when I was long down here earlier on here, we'll go to NQ. When I was long down here on NQ earlier, I was saying, okay, by this point, I'm taking off everything. Once we got to this high, I'm taking off a lot. I'm trailing up a stop in this area. And then I'm going, okay, we get back into the orb a little bit. I can trail a stop up. I can get down to just runners. We get up here, VWAP was up in this area. We get to VWAP. I really want to take everything off. I just want to be completely out because I know that this is a pipe dream type of probability, 16%. I'm not looking for that. See one question here that I'm going to hit real fast. I've got a couple minutes before I close this down. Rohan Matthew, does this gap fill trick work on other stocks? It works on every single stock out there. There's statistics on it. Let's see if we can find one quickly. Apple filled the gap right there. So we opened up here. Apple came down, filled the gap on this candle right there, pushed back up, and then fell through it. Microsoft, if things have a big gap, so let me hit that real quick for you, Rohan. Let's see. Let me just go to the gap fill. And let me show you, let's use Microsoft as an example. So Microsoft, look how often it fills its gaps. Whether it's a gap up or gap down, Microsoft, 68% of the time, if it gaps up, it's gonna come back down and fill the gap. And then 70% of the time, if Microsoft gaps down, it's gonna go up and fill that gap. So you can almost fade any overnight move. You can almost fade any time, 7 out of 10 times. I mean, that's a strong stat. Now, what does matter though, because obviously we saw the market was weak, things like that today, there's some other context you always put in, but the size is what really matters on here. So if you have a small gap, it is a high chance, but look how much these opportunities came. If we gap up by 0.7 to 1%, if we gap up, look at that. It's actually less likely that we come down and fill that. You can use this on any single stock that you want. There's every single ticker out here. I mean, look, I can type it in. There's NVIDIA, look at this. Let's see, just a medium-sized gap. Look how often NVIDIA fills a gap, even if it's a mid-sized gap, like a 0.4, 0.5% gap. If it's bigger, it still fills the gap, even on bigger gaps. That is an outlier because look, let me show you QQQ's data. QQQ, when it has a small gap, the statistics are very high. But look at this, a 1% gap. If QQQ gaps up by 1%, look at this. We don't fill that. We've never filled that in the last 6 months. That has not happened. And you can of course change the date range over here. Let's see, 0.7 to 0.99. Look at this, 60% of the time you don't fill it. If you gap down, we gap down by more than 0.7% on QQQ. 67% of the time, we're not going to move back up and fill that. So just to give some context there. I would love to keep going. I've got to jump. I have a power hour space that I'm about to open up, but I hope that this was helpful for you guys. It will be on my YouTube channel. It's also right here on X. You can go back and rewatch it. But I wanted to go through kind of what am I doing, what am I looking at, and why am I doing it? And why am I calling these things out on spaces saying, hey, this is what I think. How am I forming the thesis? Like this morning, hey, I think we're going to break that IB low before I want to take a long and then try to play the reversal. And sure enough, it played out beautifully. I thought it was, and it worked out. It was a fantastic trade in the end. But either way, appreciate all of you guys that have tuned in. If you haven't tuned in yet, appreciate you for coming back and watching this later. I'm going to try to do more of these. I want to do this more often because I want to explain my thought process with some visuals instead of just trying to call it out loud to you guys on spaces or just like in Discord or wherever else you are. Appreciate everyone. I'm going to open up Stocks on Spaces right now. So go to Stocks on Spaces on X. I will be opening up Power Hour Show right now. We'll see you guys there. Thanks everyone for tuning in. Make sure you check out Edgeful, edgeful.com. I'll drop a link as soon as I can. Peace.